Very good. I'm planning to come to Vienna next month for the OPEC meetings.
It would be great to see you.
Sure. Yeah. I'll try to arrange to get to know each other.
Yeah.
With the symposium, they have a symposium every year.
Yes, I know.
Yeah.
So you're both oil experts, right? I'm more a natural gas LNG expert.
Well, you're the guy these days.
Yeah.
It's all to do with LNG. Clean energy.
My main area has been crude oil pricing, and also crude oil movements.
Yeah.
Good morning, everybody, and welcome to the Daily Energy Markets Podcast. It is the 4th of June, 10:30 in the morning in the UAE, and later for wherever everybody else is. I think everybody else is a little bit earlier as they were spread across the Middle East and Europe today. We start our conversation with Brent crude oil. I would say little change this morning. A little softer in Asian trade today, down about 0.25%. Again, it seems we're forever plus or minus a few cents away from $65 a barrel when all is said and done. That seems to be the sweet spot for this oil market. Let's kick off this morning with Mr. Ali Al-Rayami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman. Ali, I think there would have been a few surprised voices, including myself, on Monday morning when we saw such a rally in oil prices after the decision by OPEC Plus to continue with the accelerated increases. Your thoughts on the upward motion we've seen in oil prices this week, despite this third month in a row now of OPEC Plus announcing accelerated supply increases?
Yeah, good morning, everybody. Good morning, Sean. Yes, I think everybody was taken by surprise to see that the prices went rallying up after the announcement of the extra unwinding from OPEC. But I think the market was either pricing already the third month, and it was already anticipated from the market side, and everybody was expecting it. And it was already covered in the price. The other thing, I think, according to some analysis, they say that because already they were expecting actually that the volume to be more bigger than the 411,000 barrels. So when it was announced as 400,000 barrels, then it was better than anticipated or expected by the market. I don't buy that. I don't think that was there in the market, but I think it is more to do with the pricing that it's already taking these volumes in the account, and also some other reasons, the uncertainties on the tariffs, and also the negotiations with Iran. Today, I was just now listening live from the leader, Irani leader. He's still alive. He's talking about the nuclear deal, and it doesn't look good, by the way, Sean. So let's just hope that the things goes better, but the uncertainties and also the geopolitical situation is still there. The negotiations, according to today's speech, it doesn't look like they are going to reach an agreement very soon. Russia and Ukraine, we saw the attack of a few days ago from Ukraine. So all of this, raised the price. Nevertheless, the fire in Canada. So it is not really necessary all to do with the reasons that was mentioned by the OPEC members when they have decided to bring back the volumes for the third time. But there was more other factors that affected the price more than the tightness of the market, like the OPEC think. That's what.
Let's welcome Leslie Palti Guzman, founder Energy Vista, joining us at the table for the first time. Leslie, welcome. I wanted to call upon your sort of geopolitics expertise, energy security expertise, regardless of the commodity. Are we seeing in this week, despite the, as we were talking there with Ali about extra oil supplies coming from OPEC plus, but that the return of geopolitics to the center of the commodity profile, that with the events, in particularly the Ukraine, Russia, that energy markets and watchers need to remember that geopolitics are still fragile. Your thoughts on the developments this week and how the energy markets as a whole should read them?
Good morning, everybody, and thanks for having me. So I think we've seen, for a couple of months now that increasingly markets are driven by geopolitics, not just commercial drivers or flows of commodities driven by prices, but there is an element of politicization and geopolitics. So politicizations with tariffs. We've seen China, for example, holding supply of, not buying any US LNG since February. So trade flows have been rerouted away from China, and US cargoes heading to other destinations. We've seen that the prices in Europe remain volatile, also based on geopolitics and whatever the market think that whether there will be a reset between Russia and the US or dragging further negotiations. And we've seen that impacting the volatility of European gas prices, for example. Our colleague earlier was mentioning Iran. I think, whether it's oil or gas, everybody is watching what would happen there because it can impact the whole oil and gas market. We know that, the Strait of Hormuz remains a choke point in the event of increased tensions in this area. The Houthi are still striking Israel. Also, there has been this ceasefire between the Trump administration and the Houthi. But if you look at the flow of tankers, we haven't seen a normalization yet around the Red Sea. And especially for LNG tankers, they are still all rerouting around the Cape of Good Hope. And that had, even if the shipping capacity of LNG tankers, for instance, has been well supplied, it's a myth to think that the market is better off without this route. And
it seems to have got quite comfortable with it. I mean, in the sense, a lot of flows have changed in recent years after Russia's invasion of Ukraine, and the market has relatively adapted to that. And the Straits or the Red Sea detour is another one that seems to be bedded in.
The market has adapted well, but eventually it raises costs. It raises environmental emissions too. You add easily 2 weeks or 3 weeks to your voyage, fuel costs, and eventually somebody is carrying these costs. So talking about inflation, I think we cannot discount this as. It's not a good thing for the liquidity of the market. I would say an optimization of trade flows.
Let's welcome Ehsan Ulhak, senior oil analyst and petroleum economist based in Vienna in Austria. Ehsan, as I said in my introduction, the oil markets seem to be somewhat, despite all the noise, all of the backdrop, $65 seems to be the spot where it's settled into during this OPEC plus supply acceleration. We had the first sort of drop of $10 from mid-70s after the first announcement of this strategy in early April, and we kind of moved a little bit here and there, but ultimately stuck at 65. Your thoughts on that as a view on the market, and is there anything there that could shift the oil market off this sort of 65 handle?
Good morning. I think I can add one other factor which is influencing oil prices, which is relatively strong refinery margins. Refinery margins are a good indicator of demand. And at present...
That's what we buy after all, I suppose.
Yes. Yeah. And at present, refinery margins are strong, also in the US. And I think one of the reasons behind higher demand is lower prices. And because some people say the best solution to low oil prices is low oil prices. So I think also in the Middle East, I mean, you are based in the Middle East, we have heard very high temperatures have been reported also in the UAE, over 50 degrees Celsius. And I think which is also contributing to higher demand. And Saudi Arabia might be increasing production, but some of this production is going to direct burning. And I think that on the whole, demand is still strong. And the summer driving season has started. So, I mean, we will see in a month or two how things develop. But at present, refinery margins are very, very strong, and they are likely to support prices. I mean, there was a report from the Bloomberg, I think, yesterday, which said that in the past 100 years, 117 million barrels of stocks have been to world storages, which means that we have enough.
Sorry, just say that again. I didn't quite catch that.
In the past 100 years, 100 days,
I was thinking, it's like, whoa.
Sorry,
Yeah.
in the past 100 days, 170 million barrels have been added to the world storages. And I mean, the IEA said that they see stocks increasing at a rate of 720,000 barrels per day this year. I mean, in the end, it means that there is enough supply. The main problem is whether it is resulting in enough refined products. I mean, in the US, refinery utilization is at 90%, something around 90%. But
Which is quite high.
Yeah, but last year it was above 90%, so it was higher. And as far as gasoline demand is concerned, I mean, we are already seeing relatively strong gasoline demand because of lower prices. I mean, but we have not seen levels which we saw pre-COVID era. So on the whole, demand is strong, but we have not reached gas demand levels which we saw before COVID.
Let's go to Ali on that. Ali, your thoughts? I mean, listening to Hassan there, and that this is, despite the sort of general narrative in the market that OPEC are going against the sort of perceived wisdom that demand is weak and not a good time to be increasing supply, it sounds like maybe it is. Maybe this is the time to bring back this 2 million barrels that they have been keeping off the market now for some time, with prices holding at 65 and inventories building. Your thoughts on the strategy as it stands and it continuing?
No, I think it is all to do with timing. But, I mean, now we forget that 2 months ago, we were talking about $80 per barrel. And because of this, unwinding, we have now we are talking about 65, and we think that 65 it is good. So we tend to forget that 2 months ago there was 80 and 85, and now we are talking about 65. So the market is already, or the countries already lost about $15 out of this, saga of bringing back or unwinding faster and bigger volumes to the market. I think it was timing. It was good time for OPEC, but the price we are paying now for the lower prices is huge. But anyway, that was the OPEC decision, and I think it was good that we have they have chosen this time. Otherwise, the consequences of that could have been more stronger and less than 65 that we see now. But I think I agree with my colleague here that the demand, because of summer, because of the traveling time, and the people are ready to go for vacations and so on, and that's why we have this strong market at the moment. But how long will this continue to be? I think I agree again with my colleague that the inventories they are quite high. And most of the reports, targeting and also mentioning about this. But the question is for how long? I mean, maybe the fourth quarter, And this is what many of our analysis also talking about, that the fourth quarter will start seeing collapsing of pricing because of the inventories and other reasons. So let's just wait and see. But again, the meeting in July for OPEC, it's also very important. Are they going to continue with this increasing and unwinding these volumes, or they will just keep on hold and wait and see a little bit for 1 month or two?
Well, it's certainly if they meet in early July to review the next month ahead of the OPEC seminar, and they decide to go another month of accelerated increases, it certainly will make the OPEC seminar a kind of a combative environment. No doubt, it would elevate the drama around it. I think that would be quite fun from a journalistic point of view.
Indeed.
Leslie,
we'll have fun, Sean. We'll have fun, Sean, if you're going to be there.
Leslie, I wanted to get your thoughts on your earlier comments and some of the where we're going now vis-a-vis the sort of Trump. You're obviously based in the US, but in Paris today. The efforts by the Trump administration to bring a ceasefire into the Russian-Ukraine conflict seems to be failing, but within that, there is this sort of counterintuitive sense of, if Europe and the US LNG exporters have benefited greatly from Russia's loss of market share in Europe during this conflict phase, in the US pushing to resolve the crisis in Europe, does that not look like the outlook push the US LNG out of that market with the return of the Russians? I'm just curious how you see that playing out. First of all, Trump's efforts to secure a peace, and secondly, what that would mean for US LNG privileged position in Europe over the last 2 years.
Yeah, so indeed, I mean, the ceasefire seems remote right now. We've seen branching up of attacks on both sides, and sometimes it's a strategy to come strong to the table, but it's also taking much more time than the Trump administration had hoped. They had potentially thought about a reset with Russia, and every single American administration, maybe the past 4, 5, 6 administration, has always tried to do a reset with Russia, actually, whether it's Democrat and Republican. The Europeans, I think, have lost trust in Russia, and the Europeans will have some kind of agency in deciding if they want to take some Russian gas back. Right now, you're right, following the Ukraine invasion from Russia, the US played a huge role in rescuing Europe in a way, and filling the vacuum from the missing molecules of Russian gas. Norway also is now the largest gas exporters into Europe, followed by the US by LNG. If you look at all the imports, gas pipeline and LNG together, it's Norway first, the US second, and Russia was actually third last year. So still some pipeline gas flowing from Russia.
But to be removed by 2 years' time, 2027, so the Russians have to remove.
Yes, so I think the European Commission came out strong in the recent days, reiterating their call for exiting and removing any Russian gas from the European market by 2027. This is a way also to preempt any move that the Trump administration could do, some kind of business deal, whether on Nord Stream 2 or anything, giving a strong united position and signal that Europe doesn't want any more Russian gas. And it was much needed because until now, the European Commission had left most of the utilities and member states deal on their own with Russia, whether it's with the ruble payment, or whether it's with the termination of the long-term contracts or not. Most of the utilities are in arbitration with Gazprom. We need to remember that there are still long-term contracts in place. So at the end of the day, depending on the configuration of some kind of peace, Ukraine will have to decide if they want to take back or not some Russian gas. Can it help them with some fees, transit fees? Do they want this to help them rebuild, reconstruct? Can there be some kind of concession there? We don't know yet. Europe right now, the share of Russian gas in all European gas imports is about 10-11% maybe. Is there more appetite in Europe for increasing a little bit this share or not? What for me, I think all the Russian Arctic LNG and Yamal LNG will end up going to Asia, especially in summer months through the North Sea route. Pipeline gas from Turk Stream from Turkey will keep flowing for now as it is until we find a solution, because some of the countries in Europe, such as Hungary, are not ready yet to remove this supply. So still many question mark. But for me, the level of Russian gas into Europe will never come back to 40%. But we need to remember that there are other molecules that are flowing into Europe, whether it's oil, fertilizers. So it's not just the end of the story. And I think Europe needs to see it as a more holistic approach and look at all the revenues that Europe provides to Russia from its petroleum imports.
Ihsan, I wanted to follow up and get your view on why you think OPEC Plus are following this strategy. Obviously, you indicated that demand is good enough to do it, so that sort of answers in itself. There is some sense and reporting that it's to discipline rogue OPEC Plus members. Kazakhstan, most notably, gets a lot of the headlines because they've been overproducing. Your thoughts as to the reasons that the Saudi-led OPEC Plus are executing this accelerated increase strategy?
I think people have, analysts have been reporting about some pressure from the US to increase production. This was one reason. Another reason is that
which is delivering lower gasoline prices at the pump for Americans who like to drive a lot in the summer. So a gift to Trump is one of the reasons given generally, whether it's true or not, but nonetheless, it's one of the outcomes by design or default.
Yes, and in the end, when in case of lower price, it means also higher demand, which balances. Some of the revenue which you lose otherwise. Another thing is, as far as Kazakhstan and some other countries are concerned, such as Iraq, I think there are no indications that Kazakhstan is likely to decrease its production. There is some maintenance now at Tengiz, and also there was some reports of some maintenance on the CPC pipeline. But on the whole, they are profiting from higher revenues, and they are okay with that unless prices drop significantly, because in the end, Tengiz is a high price asset. So it means when prices go down significantly, it will become uneconomical. But on the whole, they are still okay with higher revenues. As far as Iraq is concerned, Iraq has invited also foreign companies to invest in Iraq, and they only profit. These companies only profit when Iraq is able to send its oil to the world market. So, for many countries, revenue is more important than lower prices. And as far as some other OPEC countries are concerned, such as Nigeria, they have not been able to increase production. So only Saudi Arabia and some of its Middle Eastern allies are able to increase production. And whether they will be able to increase production by 411,000 barrels per day every month, I don't think so. As a result, OPEC increases will be much lower than what is being promised.
The quotas.
Yes.
Let's go to the survey question, which is actually a slightly sidebar on this whole topic, but one that I think we'll touch on in the last segment. And that is Elon Musk blasts Trump tax bill as budget busting abomination. That's the headline. Should oil markets boo or cheer Elon in this statement, which is a kind of appears, at least on the surface of it, although you can't believe anything, it appears obvious that a break between Musk and Trump. But this bill, this debt bill that's passing, this tax bill that's passing, budget bill that's passing through Congress at the moment, is due to put a lot of more deficit on the U.S. federal sovereign debt and put great pressure on the bond markets. Is that a boo or a cheer for the oil market? So the oil market should be supporting this criticism by Musk on this bill, or should they be booing it or yawning on the sidelines? Boo, cheer, or yawn on Musk? Ali, your thoughts on this point? We had Oman, apparently, according to the reporting, along with Russia, both non-OPEC countries, but obviously OPEC plus countries, and part of the 8 countries that met on Saturday. Oman took the position of advocating, let's pause here. I wanted your thoughts on that recommendation from Oman. Well, obviously they didn't pause, but ultimately the pause that they, as reported, if indeed that is true, and why they would do that, and this idea that actually the quota increases are not a representation of the actual barrel increases.
Well, I have tried to check if what been reported it is true or not, but I couldn't really. I couldn't really get the answer. But to me, these discussions and these dialogues and this exchange of different views in this kind of meetings is very healthy, and it has always happened. So I won't be surprised. I won't be, surprised to know that I was there. I've been to this meeting several times, and I've seen it, and I was part of this meeting. So it is normal to have disagreement in the discussion. Each minister, when they attend this meeting, they attend with their own views and their own market readings and so on and so forth. And they are representing their countries, and they see their countries first, and then they go and discuss accordingly. But at the end, the most important, Sean, is the result of the meeting, and it's anonymous. So that is most important, and the market should see that as a positive indicator, rather than focusing on what Oman says, what Russians was his position. At the end, it didn't make any difference. The result was that we have supported.
It's a consensus at the end of the day.
It's a consensus. That's what's more important for the market.
But on the second point, do you think
yes.
it is, regardless, that the quota increases will not be the scale of the actual production supply increases? That the ability of countries to increase these numbers is not real?
Most of the countries' ability is not real, but there are countries the ability is much higher than the others. I mean, we have countries like Iran, like Saudi Arabia, like UAE, like Kazakhstan, Iraq. They have already went beyond their quotas, and Kazakhstan, they are about 450,000 barrels beyond. So then, to me, the OPEC Plus and OPEC members should focus more on conformity and try to see, ways how to bring these countries that they went beyond their quotas is to how to resolve their issues, if it is any possibilities of resolving these issues, rather than
well, the way you resolve it, I suppose, is you lift the quotas up to where production is, and then everybody's complying, right?
And that's what will happen next year. I mean, they've already agreed to have a review, another different review, to set up a new baseline for next year or for 2027. So I think it is coming, and they have realized that the baselines that we have agreed 4 years ago, they are not longer reflecting the reality in the country. So I think it's a good thing to do. Maybe it is a bit late. I thought it is coming on to 26, but 27, fine. But I think it is important for these countries is to focus on the market fundamentals rather than, just try to please A or Z.
Right. Leslie, I wanted to get your thoughts on the reason I asked that survey question was to get some idea as to whether there is a fracture emerging between Trump and the Senate in the US. There's two things that are on the cards at the moment: the budget bill, as we highlighted in the survey question, but there's also this sanctions on Russia bill that if Russia doesn't come forward into a ceasefire negotiation, there's 80 plus senators ready to ratify another round of sanctions that would essentially put a 500% tariff on any country who buys Russian energy. Your thoughts on whether there is or any space emerging between the Republican Senate and the Republican presidency that could change the direction on some of these issues?
I think that's a very interesting dynamic that we need to watch, whether on the budget bill, the IRA, or the sanctions with Russia. We start to see some dissent on the Republican side, but until now, we haven't seen much action, so I'm waiting to see what it means on different fronts. The IRA bill is now going to the Senate, and it's going to be a very important step. As you know, currently some of the incentives for clean energy might be repealed from the versions from the House of Representatives. This bill should have been called the energy security bill, and it may not have had such backlash at the end of the day.
Right, yeah. It would have been, and it'll be interesting because obviously there's a number of Republican senators who red states are getting a lot of pork barrels from that IRA bill they may not want to give up. Hassan, last word to you, and it has to be short. Your thoughts on OPEC Plus continuing with this supply increase? You mentioned their refinery margins are strong at the moment, hardly likely to last. The strong expectation that demand, the oversupply in the market will really put a big downward weight on the oil price moving into the second half of the year. Just want to get quickly your thoughts on whether you think OPEC Plus will continue with this strategy.
I think OPEC always looks at the fundamentals, and if they see that stocks are building and there's a downward pressure on prices, then they might reconsider their policy. But otherwise, if they see the demand remains strong and there is need for more oil, and if prices remain at 65, I think Saudi Arabia will be reluctant to go for lower production, especially in the wake of some pressure from the Trump administration.
Yeah, it does seem like they're locked into this decision. So overwhelming yawn in this room to Elon Musk changing his colors. Does a cat ever change its spots, etc.? Can one really believe Musk? What are the Musk-Trump team up to by this apparent public spat? There must be something alternative going on. We have a great interview coming up after, and it'll be posted now, with Kadri Simpson, who of course was the former European Commissioner for Energy during this really critical period of COVID and then the Russian invasion of Ukraine and all of the energy security surging to the forefront of European policy, while at the same token preserving energy transition. So really a unique person who's the front row of that whole process. So a very useful 20 minutes whenever you have time. Leslie, Palti Guzman, we hope that when you return to America, you'll get up early in the morning or late at night. You'll stay up to join us on occasion. It was great to have your voice at the table. Ali Al-Riyami, as always, wonderful to have you. Eid Mubarak, Ali, for the holiday coming up. Hassan Al-Haq, thank you for your time today and for joining us, and for everybody else who's celebrating this week. Eid Al-Adha, Eid Mubarak to you all. Have a great week. All the best. Thank you.
Bye.
Thank you.